GM, welcome to Morning Markets. I've got something important to show you. So, with Bitcoin, the market dynamics have changed, guys. After this big liquidation event, we saw open interest. So, the longs, the shorts in the futures market closed dramatically. So, that literally means there's less interest in the Bitcoin futures market. And while those flushes in a bullish uptrend can be good for price as it resets leverage, you need to then see the sign of longs, shorts rebuilding. You don't want to see interest continue dropping if it is just going to be a bullish flush. So what we're seeing right now is, since the big liquidation event, open interest has gradually started building, but nowhere near the levels of pre-crash. So for Bitcoin here, we do need to see futures positioning start to build up again. If the futures positioning starts to break down below the liquidation day, that means literally that futures interest in Bitcoin is lower than it was in the peak of the liquidation. So very key level to hold on the open interest chart. And ideally, we want to start building up towards the pre-liquidation day open interest level. That's how players reaccumulate and create a bullish leverage flush, which is there to take out the tourists and tourists only. Because on the flip side, if this leverage flush has taken out everyone and potentially there's big market makers and big institutions who are going to come out in the next 2-3 weeks having blown up during that event, then you're seeing something different, and actually interest just in both retail and smart money side is dropping. And from there, you just need to see where does liquidity come back in, because it's all about liquidity. If positions build, that means we've got good liquidity at these levels. If they drop below the liquidation day, well, then we just need to find a new area of demand for Bitcoin where liquidity can start building again. So right now, what are we seeing? Well, levels are very clear for BTC. Range low, 107.2K. Been mentioning this over and over. So yesterday we had a push up, dipped off the open onto the range low, setting up that trade of the week I gave you guys, pushed up, but found resistance at 112K. We dipped into this impulse candle gap. We go to the 1 hour. You will see price wicked into it, found demand before pushing higher. However, it then closed below the high time frame SR rather than just wicking into it. And overnight, that led to the flush. So that is, as I showed you guys, you got this flush over here where yesterday I said, on the flip side, losing the impulse candle gap at 108.9K likely leads to a move back down to the range low. And well, of course, that's exactly what happened. So those moves keep on happening overnight, guys. There's a big change in the market dynamics. These blue boxes represent the New York sessions on Bitcoin. This is when the Americans are in the game. When TradFi's opened up, the ETFs can buy and sell Bitcoin. We're seeing prices barely moving. That's because these sessions are very liquid since this liquidation day. Whereas all these red boxes are outside of the New York session. It's the overnight session. That's where we keep seeing big volatile moves. This is where there's less liquidity, guys. It's very, very noticeable. I mentioned this yesterday, how you're seeing these overnight moves. They are causing these big opening drives, which can be great for your system building, guys. Bit of alpha there. Whereas the New York moves are pretty stunted. And that's what I think, because of ETFs. They're all in the market. It's very liquid during these sessions. Remember, the Bitcoin CME chart didn't have a big liquidation day. This is the futures market in the US. They closed before that liquidation. Friday's New York session actually closed at 114.5K, whereas Binance, Bybit, and your traditional crypto exchanges, they carried on, of course, because they're open 24 hours, and that led to that big flush. Call it manipulation, call it what you want. I know there was some fuckery from Binance, don't get me wrong. And it's very clear that it's coming outside of the New York session where liquidity is thinner and allows for these bigger volatile moves in the market. Whereas, as I said, the Americans, they didn't have that. But what have the Americans been doing in reaction? Well, they have so far sold off and sold off and sold off, despite the fact that they didn't experience the liquidation. They've still used it as an area to sell at when we tried to bounce back into the Friday New York close, sold down, and we've got nowhere near it really. So that's a key level to get above for any kind of reaccumulation here on Bitcoin if we're going to see something like this. Otherwise, potentially we've come up into that 112K level. Maybe that is the last point of supply before distribution lower. Again, trigger for that is a daily close below 107.2K. Then you're looking at a potential breakdown on Bitcoin and redistribution lower. But if we can bounce up, maybe we can have a sharp rally and provide more exit liquidity, or we can either reaccumulate and build a base for higher. And it's going to be very indicative based on what the Americans do. Do they keep selling? Do we keep seeing the overnight session providing big volatility where Bitcoin is just not liquid enough? So you're seeing these cascades both up and down. So another thing to mention is the Coinbase wick, it only went to 107K, whereas Bybit, Binance, Perpetual Futures, they went to around 100K, 101K. So everything below 107K was purely leverage flush, whereas Coinbase, this is a spot exchange. This is where spot sellers were happy to sell to. The rest was taken over by futures positioning being forced out of the market. So we know 107K is where the spot selling got exhausted. So that is further confluence of why that range low at 107 to 107.2K is so key to hold. Because if we go below there, that means spot sellers are actually selling below that big liquidation day on Friday, and they're happy to sell below it. Whereas if we can hold above it, then potentially that was the flush and now we can rebuild. So further confluence around this 107 level that we do have to hold that range low if we are going to bounce. And if we can have that bounce, as I said, guys, I don't know whether it's going to be distribution or reaccumulation. I'd bet towards distribution due to many signs that I've gone over in the weekly outlook video on Sunday. Make sure to check it out for a high time frame view. But either scenario has a bounce unless we close below 107 to 107.2K. So while we're above here, can we reclaim that high time frame SR? That's going to be the key level. And you just want to play it level by level. Okay, we lost the high time frame SR. Look for shorts down to the range low. Boom, that's played out overnight, as I gave to you guys in my analysis. Now we're at the range low. Okay, if we can now reclaim the high time frame SR, you can treat this as a potential failure to return. And we just built another higher low here before making a move higher. And you can play the momentum in that final part of the move. You don't have to catch every move from bottom to top, trying to predict where the market's going to bottom and top. No, you can wait for some confirmation from here, playing it level to level. At least that's what I'm going to be doing. Lose the range low, then your bias moves towards a move to 105. And lose 105, then your bias moves towards a further breakdown. It's as simple as that, guys. Because in this market, it's really a scalper's market. As I said, New York sessions, they are super low volatile. It's when we get into that session outside of New York hours where you're seeing the big volatility coming as liquidity is low. And that comes back down to the open interest, guys, that I shared with you here. We need to see this start to stabilize. We need to see positions rebuild, this start to rise. We don't want to see it go below the liquidation day, because that means liquidity is not happy to be provided at these levels. And if it's not happy to be provided here and there's no interest at these prices to go either long or go short, then we're going to have to find a new area where liquidity is interested in coming into the markets. But if we can rebuild, then potentially you see something like this where Bitcoin can come up, backtest that 0.25, reaccumulate before going higher. That's the bull case. But at the moment, if we can't even get above the zero, so this is the range here from the high to the low, which then got swept. You guys will know from the range trading setups, that is beautiful in terms of confirming a highly probable range, which is played out nicely. We've now broke down below it, and you don't want to see price build value for too long below this range, because then you're toying with the idea of redistribution from lower. Let's look at some liquidation wicks, guys. So if we go back to FTX crash, probably the closest example to this, this was a huge liquidation day. But what did price do? Price simply found a low on the liquidation day, retested it so it could not go lower. And because it couldn't go lower, it then moved up to the range high, moved back down, and overall created a consolidation. That was good. Daily 12 and 21 bands, they weren't being respected as resistance. You can see price coming through them, getting above them, getting below them, and overall staying within this range. Retest held successfully. Whereas you look at a liquidation day like this, instead you see daily 12 and 21 bands holding as resistance. So you look at this, price finds a liquidation day, comes back up, consolidates, resistance at the bands, flushes lower. Retest failed, and we break down. I can show you more and more examples of this. So again, we've got a great example here that's quite akin to what we're seeing. Liquidation day. But what does price do? It comes back up because you get the initial reaction. Smart money don't sell during a liquidation. They sell on the bounce after. And if they do sell on the bounce after, this is what you see. You see daily 12 and 21 bands hold. You then see price overall just rounding out. You're redistributing lower. Now you're building value at the bottom end. So then that leads to the break of the structure and we go lower. Instead of, as I said, this beautiful example where we actually retest the lows and hold it. So you're looking at retests here, guys. Again, another example here. You set a liquidation day. We fill in the wick, as you so often do, as I mentioned. You come up above the bands, blow them, get a nice retest which holds, and then you start flipping the bands. Red, green, red, green. That's indicative of price building within a consolidation, and then you build that internal structure, higher highs and higher lows, slowly breaking up, rather than the opposite of what you saw in the bearish examples, where price actually just then starts rolling over, building value lower before breaking down. So again, we look at today's liquidation wick, or the recent liquidation wick, sorry. What are we seeing? Well, we've got the retest. Great. That so far held. Now, are we going to build value, higher highs and higher lows through the range, or are we going to backtest these daily 12 and 21 bands as resistance and slowly start consolidating lower and lower and lower and building that value down at the lows? If so, then you're probably looking at a breakdown lower where we have to just find demand from lower. But if we can start to push up, find acceptance within this range, open interest builds, not much respect of the daily bands, then you can look at the green path and actually see Bitcoin potentially reaccumulate for higher. So that's what I'll be looking at very closely. Can we consolidate and accept here, or do we have to roll over, hold these daily 12 and 21 bands as bearish? And that's likely going to lead to further markdowns lower. So that is the full BTC update. Again, these are the schematics that we're looking at. 107.2K, that is your key range low level to hold intraday. And when we're looking at the Americans, we're looking at what are they doing compared to this Friday New York session close. Can we get back to it? Or is the volatility going to continue in the overnight sessions where we need to lose that 107K, that all important level, Coinbase liquidation plus the lows? So that's what I'm looking at when it comes to BTC. Now on Ethereum, much weaker than Bitcoin. We're coming back to the range low, so pretty similar. Found resistance at the high time frame SR over here. So again, not much interest in altcoins. They have even less liquidity than Bitcoin, as mentioned yesterday. After a big liquidation day, what do? Smart money, they wait for the bounce. And what are the first assets they sell? It's the higher risk assets, of course. So Bitcoin should be the asset that's holding up the best. Altcoins, lower caps, they're likely to have to find liquidity much lower because their liquidation wicks went much deeper, showing they had thinner order books. So they have to go find new demand. And ETH fits in the middle, in between, where you're just better off trading Bitcoin because it has the best chance of actually finding liquidity and demand here. If Bitcoin's not going to find it, then ETH's certainly not going to find it. So similar levels, range low, above, consolidation's good. Below, we're looking at a move back to the lows where you just want to see. Similarly, do we start rounding out and building value lower? If so, that's more likely to break down. Or can we actually reaccumulate, hold some levels, and show some signs of reaccumulation and interest again in the market? So that's the full crypto update. When we look at some of the macro assets, what are they doing? Well, we know gold has been choppy lately. If we look actually on this chart over here, I mapped out a box with you guys on gold. I told you, break above the box, you're looking at continuation higher. Break below the box, you're looking at continuation lower. And so far, we've held beautifully. Went to the top of the box, swept the highs, rejected, went to the bottom of the box now. So we need to see, does this break down? If so, that rejection's in play. You've got a potential for a sweep reversal pattern here. That gets confirmed on a break below the box. Of course, if your systems trigger earlier, you could be short from over here. And we had all the discretionary signs of a potential low time frame top, if not higher time frame top on gold. That will be seen in the coming days, but you're looking for the break of this box to determine the continuation move. Otherwise, you just expect ranging within the box. Very simple. Boxes are very useful for not getting too bullish until we break out, not getting bullish at resistance, and of course not getting bearish at support until we break down. So gold playing nicely, got a sweep there. Sellers are showing up back at the highs where euphoria was really built up, and now we're seeing, does this chart break down? So that's the move for gold. And if it does break down, you're looking at 4K. Can we hold that round number level? And on the daily, this is an order block here. So if we do break down, you're looking at, does this daily candle hold? That's going to be very key for the high time frame direction of gold. This low here, which led to this recent up thrust, this really euphoric up thrust, which I've been mentioning. Look, guys, gold is getting away from these daily bands. This is when it's most likely to have some sort of cool off. As I said, getting away from the bands, most likely to have a cool off, if not breakdown. So then if it does have a cool off / breakdown, you're going to see that by whether it holds this order block, or if it loses it, then you're looking at a breakdown further. So that's what I'd be expecting on gold. Come back to this zone, should get bidded at least first time. And then from there, does it break down or does it lead to higher? Cause and effect, that's king in all markets. Consolidations lead to markups and markdowns. You see it time and time again, these sideways periods that bore out retail. That's what leads to the big moves. So I'll be coming in for a sideways period. And if so, what way does it break on gold. And when we look at stocks, to wrap up, stocks have consolidated. They've done what I said they're going to do again. They're trading in this box. These boxes work beautifully, guys, for understanding how markets work. So now you're seeing they're coming back to the breakdown level. So look how much stronger stocks are than crypto. They're back at their breakdown levels, which Bitcoin is nowhere near. Again, you're seeing smart money flow into stocks, flow into gold, not into crypto. And that is the weakness right now. Bitcoin is the last hope, but often when you see these signs, Bitcoin just means it's going to roll over later than the rest of crypto. So very cautious of that, the fact that we're seeing strength here. Now, does this chart continue to range and form a wider distribution, or do we actually break out higher like we've done so many times where we have a quick flush and higher on stocks? So that's what I'll be looking at, this blue box. Can we cleanly break above and push higher, or do we form something like gold where we hit the highs, come back to the lows, hit the highs, and then maybe break down later on? 654 is the key level for that. So markets are interesting. Going to be a lot of opportunity, guys. Make sure if you value these videos, you hit subscribe, hit that bell on, drop a comment. Tell me what you want to see more of in my videos. Help me out. I read all the comments, reply to all you guys. I'm trying to build the best trading community in the world. I've got big things coming. So if you like this content, let me know. Give me your feedback. Let's see what the markets do, because could be shaping up for very interesting times where I want you guys all on board with me, taking all the opportunities that I take. So see you guys in the next one.